Ladies and gentlemen, good day and welcome to the Anant Raj Q4 FY24 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal the operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prateek Singh from DAM Capital Advisors. Thank you, and over to you, sir.
Thanks, Darwin. Good evening, everyone. On behalf of DAM Capital Advisors, I welcome you all to Anant Raj LimitedQ4 FY24 earnings conference call. We have with us on the call today the management of Anant Raj, Mr. Amit Sareen, Managing Director, and Mr. Pankaj Gupta, the CFO. Before we begin, we must remind you that the discussion on today's call may include certain forward-looking statements and hence should be viewed in conjunction with the risks that the company may face. Without any further ado, I now request Mr. Sareen to take us through the strategic highlights of the business. Thank you, and over to you, sir.
Thank you, Pradeep. Namaskar, everyone. Thank you very much for joining and taking out the time to listen to us and clarify whatever questions you have after that. So just to give you a synopsis, as you must have gone through the numbers, this year has been one of the best years of the company so far. The company crossed a top line of 1,500, comfortably crossed a top line of 1,500 crores, in fact to be exact 1,521, and got a PAT of 265 crores, which so far has been the highest the company has ever achieved. We are pretty bullish. We are still pretty bullish, on the company and the ongoing projects. As you know, that in the last year, the company basically focused on 3 projects in the real estate segment. We did a group housing, we did villas fully furnished, we did floors by way of making G+3 and G+2 structures, which was again pretty successful in the market. All the 3 projects were received very well by the market. We got very robust demands, and we were able to realize a better price than what we had projected also. This is thanks to the tailwinds in our sector, and thanks to RERA and other regulations and all, which have given a lot of clarity in our sector. So going forward, we are still focusing on 63A in the coming years. But just to complete the synopsis of the last year, these 3 projects were launched, received very well by the market. Number 1, the company in January this year completed its QIP, in which the company raised about exactly 500 crores, and that money was used basically to retire debt and the other purposes of the company, general corporate purposes of the company, which is all done, and the company going forward is pretty comfortable and executing its projects in the real estate sector as well as in the data center. The next is the debt. The debt of the company has substantially come down. As you are all aware that in the previous call, we had projected that we are by December 24, the company will be a net debt-free company. The company is fully on the lines for achieving that. The debt has substantially come down. It is now, the net debt on the company is 290, which is a substantial reduction in the debt. The cost of borrowing also of the company has now come down below 10%. So this is vis-a-vis the real estate part and the money which we generated from there. As you all know that Anant Raj in data centers has also become a major player in North India. We already started 3 megawatts. The balance 3 is also ready and is in the handing over stage. We are doing that. And we are also very happy to announce that in the previous year, technically in the previous year itself, in March, the Anant Raj also entered into a fresh agreement with TCIL, one of our partners for data centers, for providing cloud services also. So this is an add-on which the company has now started doing on a basis of trials. With its co-location, which the company is already doing, we are very confident that the project which we are delivering in the market is one of the best. And we understand this project very well. Both cost-wise and quality-wise, we are one of the best in the country, as well as we are easily competing with data centers even outside India. So taking this forward, when we got this opportunity through QCIL, we thought that on a trial basis, we will do this also, and we've already started working on it. The agreement has already been signed and done, and the work for this has already started. Going forward, with real estate, the company is now fully paused. The company already has the land, all the basic permissions are there, and in the coming year, the company is going to launch another group housing. The company will launch about 4 lakh into two projects of 4 lakh each, totaling to 8 lakhs for independent floors, and another project of housing in 63 itself of 6.5 lakhs. So this is for this, the land is already done, and the company is fully poised to launch these projects. With data centers, as you know that our initial thing was 21 megawatts, which the company is fully poised as per the projection and the commitments which we made. We are going to have this operational by 21 megawatt will be operational by December 24. In addition, we have also started work at our Panchkula site, where we are going to have another 7. So fortunately, we will have 21 plus 7 by December 24. So this is the basic synopsis of what we have done in the previous year. I now hand over the thing to Mr. Pankaj, our CFO, to give you a synopsis of the previous year. Pankaj, please.
Right. Thank you very much, sir. Good evening, everyone, and thank you for joining us for earnings call today. Firstly, I want to express my gratitude for your presence and delighted to report that our performance this quarter has once again demonstrated our commitment to a strong financial growth of the company. Moving on to our financial highlights for the quarter and full fiscal year FY24, I am happy to announce that our revenue from operation has grown 51% year on year, reaching rupees to 1,521 crore FY24. Additionally, in quarter 4 FY24, we sustained a momentum with a 56% year-over-year growth in the revenue, which is rupees 453 crore rupees. During the quarter, our EBITDA reached to 115 crores, making a 39% year-on-year growth. The EBITDA achieved in Q4 FY24 surpassed the company total EBITDA for the entire fiscal year of 22, showcasing our focus, effort, and growth aligned with the strategic objective. Moreover, our EBITDA margin remained reversed to at 24.4% in Q4 FY24. Looking at the full fiscal year FY24, we achieved a 51% growth in EBITDA, totaling to 371 crore rupees. Our PAT during Q4 grew to 67% to 84 crore rupees on account of a strong operating performance and debt reduction. For FY24, we saw PAT growth of 75% and achieved 266 crore of PAT during the year versus rupees 151 crore achieved during FY23. I am very pleased to share that this is company's best profit so far, which we have achieved over last 15 years. The company has made a remarkable stride in the debt reduction and anticipates achieving a net debt-free status by December 2024. Additionally, we have managed to reduce the overall borrowing cost by below 10%. The net debt for FY24 is to 290 crore rupees versus rupees 988 crore rupees in FY23. We continue to generate an improved operational cash flow quarter on quarter and expect the trend to continue further. In FY24, collection yields as an impressive overall cash flow inflow in FY24 is 1,260 crore rupees. This is an update of finance. Thank you. Now I am passing the call over to the operator to open the floor to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Balchandran Vasant Shinde from Kotak Life. Please go ahead.
Hi, sir. Sir, regarding cloud service, as you mentioned, if you can provide how the revenue booking will happen and what kind of a profitability we'll be able to generate. And also on the 3 megawatt which additional come into operational, from when we can expect revenue contribution and EBITDA contribution from that.
Mr. Bala, the three additional megawatt is already in the stage of handing over. So maximum another 1 month we will start recognizing revenue from there. It will start accruing. That's number one. Regarding the cloud services thing, this is a brand new thing, sir, and this is something which came to us from the client itself. The co-location facility which we have created, like you just said, it is one of the best. So we got this offer that, if you can provide a server for which they will give us all the details, because we do not have a lot of expertise in this segment. But the revenue, sir, with the server coming in can actually go up almost 5 times. So, like 4 years back, we started this data center thing, and now today it is practically happening on ground. So let's start this. This one is not going to take 4 years. God willing, if it works out well, you will see substantial increase in revenues by the end of this year itself.
So instead of 90 lakhs per megawatt, you are saying we'll receive somewhere in the range of around 4 CR to 4.5 CR per megawatt rate.
So 90 is all sorted, yes. Very right, sir. 90 is all sorted. That is something which we understand very well, and we are now in the multiplying stage, and we go on multiplying. Like we just mentioned that instead of here, we are now aiming to get to 28, 21 in
depreciation part will increase, right? Because servers are relatively accelerated depreciation.
This 21 plus 7 is co-location as of now. And in this 7, the additional 7 which we are getting, we will now partly start using this for server as well.
Okay.
So 90 is definitely sorted, sir. And like we just said, that this revenue, when the server is in, of course, it is not going to be in for the whole 28, but as we are going to test this maybe with half a megawatt, or we don't want to give the exact numbers right now. We are in the stage of planning it. So this revenue from this aspect can multiply. 90 is definitely there, sir, but this can then multiply by 4 to 5 times.
Got it. And even on the profitability part, if you can provide some detail, will be great. Not right now, then after.
The server cost is not much, sir. On a trial basis, we are trying with, I can just give you basic numbers. As of now, what we have been given to understand, and we are now going to implement it. If we spend 20 rupees additional on the server, we are expecting a revenue in 1 year of close to 120 rupees, sir, on that additional part. So that's the increase. Because this is only we are eligible for this because we are the only guys who are sitting with the infrastructure.
Got it. Thanks, sir. I'll come back for further questions.
Sure. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. We have the next question from the line of Arpit Shah from Stallion Asset. Please go ahead.
Yeah, hi, am I audible?
Yes.
We just wanted to understand the unit economics of the data center business. How much are we investing? Can we expect from there, and what kind of payback we would be seeing in this business? And the 300 megawatt which we are intending to roll out, what would be the timeline for that?
See, right now we have already rolled out 3 plus 3. 3 is already there, and the balance 3 is now getting rolled out. What we are on an average, because in our case the land and building is already invested, and we are strengthening the building and then investing in the infrastructure, we are spending an additional cost of about 26 crores. And as we mentioned in the previous calls also, we get about 90 lakhs per megawatt per month. We spend about 15 on the maintenance on operations of this. So 75 is a beta which comes to us every megawatt. So our payback on the additional expense which we are spending is about 3 years.
But you own the land and the building, right?
Yeah. Yes. That is the advantage, and it's all ready, and non-encumbered, everything was ready. So that's how we started doing this. We strengthened 2 towers first, and then that is the 2 towers which are now going to give us 21 megawatts, and then so on.
Got it. And how are you looking to roll out the 300 megawatts that you have planned? Like, what will be the timeline for that?
See, right now, this another 7 gets operational by December. And as you know, it's simple math, 75 into 28 and so on. So then we discount, we have good cash flows coming in from our real estate business, and whatever is the gap, we discount our rentals with this, and we get money into it. See, Anant Raj in principle is going to be zero debt by the end of this year, but LRD is one aspect which we will use as and when we require it. But we will never go beyond LRD.
Got it. And any plans to demerge, or that's way too far?
Sorry, Arpit, can you repeat that, please?
Yeah, any plan to demerge the business, or it's really very young the business?
It's too soon to say anything on that, sir. Let's focus on execution, Arpit. We are very clear. We have the assets, we have the buildings. Let's get to the 300 mark as soon as we can. And our internal planning, in fact, you had asked this question which I missed out. Our internal planning is to get to this mark in the next 4 years.
4 years. And the EBITDA is 75 lakhs per megawatt per month.
Hanji.
Thank you, sir.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1 on your touchtone telephones. The next question comes from the line of Upendra from Stockstar Consultancy. Please go ahead.
Yeah. Hi, congratulations on the very good set of numbers.
Thank you, Govindaji. Thank you.
Yeah. Firstly, I wanted to know, since we have been stressing about the land which is available with us, I wanted to know how much percentage of a megawatt cost does the land cost actually. Supposedly, we are telling the cost for setting up 1 megawatt of data center is say 25-26 crores. What is the actual percentage of the land cost? And what advantage do we as Anant Raj have compared to others who are setting up data centers?
Yeah, the land cost varies from location to location, right? So the 3 locations where we are sitting on, we already have the land. So more than the land, the biggest advantage we feel that we have is the timeline. Of course, land cost can vary for people, sir. But we know for sure that we are, other than the land cost which we already have and the building which we already have, we are incurring an additional expense of 26 crores, which we recover in 3 years, and then, our profits start to kick in. So that's the logic we are in this for. Land cost, sir, is a very variable thing. Land depends on where you have the land. If we talk about the 3 lands we are talking about, the land and the existing buildings which we are sitting on today are at a valuation of close to 3,000 crores as per the present market value, sir.
Okay. No, my question was, is it a substantial part of our data center cost, or it is a very minimal cost?
It is a substantial part, sir. It is not a very substantial part.
Yes. So that's what I wanted to understand.
It's not a very substantial part. So the basic advantage which we feel, like we just told you, is the timeline. So anybody to be on the stage where we are will take at least 3 to 4 years to get to where we are right now.
Okay. And secondly, I want to understand, you were telling about realizing 4 to 5x of revenue over the server or something. Can you just reiterate to what you were telling regarding 4 to 5x revenue?
Govindaji, this is done in 2 parts. As of now, Anant Raj has fully understood and started executing the co-location. When we say co-location, we are providing the rack with all the infrastructure, which means the building, the power backups, the firefighting, the air conditioning, the batteries, the switches, everything is done by us. So this makes us a co-location player. What is remaining here is the server. If we don't want to do it for the whole 300 megawatts, and if we are specifically talking, right now we are working on 28 megawatts, 21 plus 7. So the 21 is hardcore meant for being a co-location only. But the additional 7 which we have created, mix and match, in this, as of now, we are starting this as a pilot project, and this also because we were approached by one of our clients, and the client offered us that if you start putting in the servers, the revenue projection which we have seen on paper is almost 4 to 5 times higher than what we are presently getting, sir. So we want to do this as a pilot, and in this, the client who is coming in is going to be doing a lot of hand-holding for us, and the agreement for that has already been signed. So we are now, the first pilot project will kick off in the next maybe 2 or 3 months, sir.
Lovely. So is there any plan which you have for setting up the servers together, like any roadmap which you made? I know it is very early to ask you, but obviously you must have thought of something.
So let's try this because this is something which came in, and it is our duty to inform the market also, because we've already informed the market about the agreement which we have signed. This agreement which we have signed is with TCIL, a Government of India undertaking, and together now TCIL and us, we will be providing cloud services to various clients, and in this case we will be putting in the server. So the agreement for this has already been signed. So Abhi, let's try this, sir. Let's try this with maybe a few racks like we just discussed, close to half or maybe little less than half a megawatt, and then let's see how it works out.
Lovely. Last question. The 300 megawatts which we are projecting to do, what is the timeline which we have kept for that? And secondly, the revenues which we have thought that we will be getting around 75 lakhs per month per megawatt, is it a fixed revenue or it might vary maybe in the coming years? Supposedly there is a lot of supplies of the demand in comparison to the demand.
Sir, the 300 megawatts we will get in 4 years, sir. That's number one. Number two, this 90 lakhs and this the operating expenses of 15 and 75 coming into pocket is as of now. So tomorrow these revenues might change. They are somewhere they are linked to inflation, where they will definitely change as per the inflation, up or down, whatever the case may be. And of course, when the competition starts kicking in, then things will change. Let's see how they change. But at Anant Raj, the biggest benefit, the low cost, because we are able to do this in 26 crores, sir, whereas there are people who are spending almost. So Anant Raj has that buffer that tomorrow if the revenue stream is definitely controlled by the market, sir. So let's see how they shape up. But as of now, sir, thanks to the law already being notified by the government, and now it's very simple that Indian data has to stay within India, which is the case with any big established country. So our country has also gone into that category. So this law is here to stay, sir. So demand here is only going to go up. Of course, supply will be there, but the demand is phenomenally going to increase, sir.
Correct. So if I'm right, 300 megawatts and 75 lakhs of revenue will translate to somewhere around 2,500 crores in the next 4 years, just from the data centers.
Please, sorry, you're saying in the revenue. Sorry, can you just repeat the last part?
Yeah, the 75 lakhs for 300 megawatts should come somewhere around 2,500 to 3,000 crores.
Yes, sir. Yes, sir.
Is that correct? Okay, lovely. Thank you so much. Thank you so much.
Yes. Thank you.
Thank you. The next question is from the line of Pawas Petya from Aditya Birla Mutual Fund. Please go ahead.
Sir, on this server thing, you're saying the revenues are 4 to 5x of the rental which you are getting right now. So it becomes 4 to 5 CR per month, per megawatt?
Yes, sir. Yes, sir. So we can't give projected numbers like this because this is a trial case which we have started. But yes, sir, definitely. Yes.
Okay. And since the client is providing the technical know-how, everything, so what's the incentive for clients when he already has a technical know-how? The margins are 80-90%. Why?
Because we of course we have a good arrangement with them which we can't disclose it like this. But then his fees goes up, sir, because he gets a X amount of fees on 90, and he gets if the revenue is 5 times higher, then his fees is also 5 times higher.
Yeah, I understand, but the only thing was, since you are kind of a new player here, your knowledge about this server part is kind of quite limited, earnings 80-90% margins. So, what's in for the client?
The client is as it is paying this, sir. The client is as it is paying this elsewhere. Sir, if you you can simply go on any website of any major cloud provider, and you can see for yourself what are the rates. So the rates we are talking about 4 to 5 times is actually in line with that. In fact, maybe little cheaper.
Okay. And what kind of investment you will need from your side apart from the 20% of the operating cost only?
We will actually be investing in the server, and that's how we become eligible to earn the cloud money. So server is what we're going to be investing in, but as of now, we are going to do it as a pilot in a very, as a test case, not even half a megawatt. Let's see how it pans out, and then we take it further.
In terms of costing of this server per megawatt, any ballpark numbers?
So this is, again, we are now working on it, and hopefully by the time we do our next call, the server will be in, and we can share the exact cost. But like we just said, as of now, we are going to do it like a pilot and with bare minimum investment, and let's see how the revenues shape up and then multiply this in future.
Sure. And sir, the target was this 28 megawatt by December is okay, but if I have to look at FY26 and what kind of figures we are looking for data center?
Sir, we get to 28, and then the revenue which we generate from this 28 plus the real estate income, which is completely sorted, because our 63A as of now for the next 3 to 4 years is completely sorted. We are sitting on 100 acres which we are now executing. So both these things put together, we get to the 28 mark, then we get to the 50 mark, and then so on onwards from there, sir.
I understand the bigger picture. Only thing is
two locations. We started working on the Manesar location, which is known to everyone. The additional 7 is coming in from the Panchkula location. So we started work there as well.
Okay. Yes, sir, I understand the 300 megawatt in 4 years, but what will be the second year number, third year, any broader number you have?
It will be 50, definitely, and we are working on increasing this 50 to 75. So sir, as of now, see, this is a brand new thing for the whole country, as you know. The data center business is brand new business for the whole country. So we are also learning as we are going on ground. Today we feel that we have understood the co-location part very well, which we are doing as one of the best in the country. And now slowly we move on to different things. So we'll start multiplying capacity as well as add-on services along with this as we go along, sir.
Sure. And on residential piece, you said 0.4 million square feet into 2 plus 0.65. Total launches are roughly around 1.45 million square feet.
Post these 1 million square feet of group housing, sir.
Okay, so this year you will have roughly around 2.5 million square feet launch?
Yes, sir.
Okay. And post this, how much land parcel is available in 63A in terms of million square feet?
We have 3 more group housings, and we have another vis-a-vis which we already own. We would have close to another 55 to 60 acres of land remaining with us, which is eligible for various licensing.
Okay. Yeah, but on current land bank, how much is left after this 2.5 million square feet?
Sir, after this 2.5 million square feet, our total is approximately, with the present land bank, we are eligible for 9.07. So minus 2.5, balance is still there with us.
Okay. Thanks. That's all from my side.
Thank you.
Thank you. The next question is from the line of Akshat Shah from Niveshai. Please go ahead. Akshat, the line for you has been unmuted. You may proceed with your question.
Hello. Thank you for taking the question. I want to ask, you said in previous meeting that a mega data center will be funded through internal revenues. So how will be it done? Because it seems hard to generate 8 to 9,000 in the term of next 3 years.
Actually, we are already, the present land bank which we have is eligible for 15,000 as of now. The present in 63A alone. Again, that is all on our website. You can go and see. You can have a look at the projects with all the numbers. It's all there. Number one. Number two, as and when we require, like we said in the beginning of this call, as and when we require, we have the option of using LRD. Because LRD has already started accruing. Of course, we are not using it because we don't need the money right now. But as and when we need a bridge to finance this gap, if there is any delay or maybe the market slows down with our real estate, then we have the option of LRD. So with these 2 combinations, we are completely sorted for our 300 mark.
Okay, and the second question is that what can be a net margins for data center services?
Akshat, as of now, we only discuss the co-location thing. The co-location net margin, the EBITDA is 75 lakhs per month per megawatt as per the present going rates.
Akshat, does that answer your question?
Akshat, anything else?
No, okay, done.
Thank you.
Thank you. The next question comes from the line of Rishit Shah from Nuvama Wealth. Please go ahead.
Yeah, hi sir, good evening. Thank you for the opportunity. Yeah, great set of numbers. So two questions from my end. So one regarding, so while we do not want to give out the exact numbers, but some idea regarding, so when we say the revenue from the cloud can be potentially 4 to 5 times of the co-location. A similar range or a ballpark figure you can give regarding OPEX? How much increase do we see over there?
Not much. Richard, like we just said, we are doing this as a pilot because we had already informed the markets in March. So we had to cover this in this call. As of now, this is going to be a pilot which is not even half a megawatt to start with. And the investment is very minimal in this. We are going to be getting servers as per the technical expertise of our client, which we have already signed the agreement with. And then we provide cloud services. So as of now, the expense is very minimal. As you know, we can't give future numbers like this. But as of now, we are talking about a basic expense, which is maybe 20-30 crores, and then taking it from there.
Okay, got it. So that would be the capex part, but on the OPEX side, it would be similar to what we are doing co-location.
Operational cost is it's not going to be a lot of huge difference in, because as you know that the revenues go up almost 5 times. The operational cost is not much. Maybe it will go up. There will be 15 lakhs there. That can go to maybe 25-30 lakhs, not beyond that.
Okay, great. Sounds great. And second question, on the bookkeeping side, so in the fourth quarter, if you can just give me the number of the revenue that came from data centers for in the revenue as well as the EBITDA for the fourth quarter.
Fourth quarter accrued revenue is close to approximately 3 crores. Because it has just started now.
Right. Okay, sure. Thank you.
Thank you. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Prateek Bhandari from Art Ventures. Please go ahead.
Hello.
How are you doing?
Yeah, am I audible, sir?
Yeah, you are. Can you be a little louder, Pradeep?
Yeah, sure. Yeah, so just had a couple of questions from my end. Just wanted to understand as to what is the contract life of a data center. If you can let me know as to,
So this varies from 10 to 15 years, sir.
10 to 15 years?
Ajay.
Okay, and as you stated that this 21 megawatt will be operational along with the 7 megawatts which you are having in Panchkula by December 24.
Ajay.
Right? So, if I have to understand about the total capex that you would be incurring on the data center for this current year, that is FY25, would be approx?
500. 500, sir.
And what would be the source of funding, sir? Whether internal or any debt?
As we just explained, as of now, the company is sitting on net cash money, which is basically meant for executing data centers. And the launches which we've already done are generating enough money. So all this 28 is completely done in-house.
Okay. Hello?
Ajay.
Yeah. It's completely in-house?
In-house, Ajay.
Okay. And another question that I wanted to have was, wanted to understand as to what is the maintenance capex that we can look at in terms of the renters in the data center. I mean, regard to the renters, what kind of maintenance capex can we expect?
So this is the operational cost already we have explained around 15 lakh rupees per megawatt. But capital expenses, operational capital expenses, it will come in after 10 years. Basically, all the equipments we have incurred in this. It is a very long process to get it capitalized because only battery is the case in which we have to do the capex replacement.
And what about the security systems?
Security system may come into the operational activity, that we have already considered in OPEX.
So 15 lakhs जो हम लोग खर्च रहे हैं ना every month.
Just wanted to get a ballpark figure as to in terms of percentage. I mean.
So it will come near about 18%, sir.
18.
Total 18%.
Total 18%. Okay, okay. Thanks a lot, sir. That answers my question. And wish you all the best.
Thank you.
Thank you. The next question is from the line of Sitaram Agarwal from Treeline Investment Management. Please go ahead.
Hi, Amit. How are you?
I'm good, sir. How are you?
Very good. Yeah. Amit, just a few questions. Did I get you correct in your statement that the capex for data center for you is about 25-26 crores versus for competition it will be double that amount?
Yes, sir. Definitely.
So is the difference primarily and the difference in this capex is primarily coming from the land and building investment? Is that correct?
I'll tell you, sir. We have kept it very simple, sir. We already have the land and building. We are strengthening our building. Number one.
Sorry, what?
Number two, then we are spending on whatever money we are spending to be a co-location player. And this, we are getting a finished product in our hand at 26 crores. So when you see numbers coming out in various reports and all, they are almost double when people are projecting that they'll be making data centers. They are talking about a cost of 55 to 60 crores. So we are taking it from there, sir. We actually, what their sources, we don't know. But this is something which you can go and see on the website, cost of 1 megawatt of data center, and you will come across these figures of 55 to 60 crores. In our case, we worked out very carefully that we have the land, we have the building, we need to strengthen. So we know that we are spending about 4 to 5 crores per megawatt for the strengthening part, and the balance is for the equipment. And then we compile the whole thing, and in 26 we get a finished product, which we have delivered, and it is visible on site.
Right. Okay. Got it. So this will make your overall economics much better compared to competition. Yeah.
How we came into this was our buildings were there, they were vacant. Fortunately, there was no third party rights, no encumbrance on the buildings. And as soon as this data center thing started coming into the country, this is somewhere in 2019 when the government was serious about making a law and all these things, we started working on this aspect. We approached, various expertise bodies who certify and rate data centers. They certified us, they rated us that yes, these buildings are eligible to be data centers. And then we started our work, and today we have a finished product with us.
Yeah, right. Yeah. Amit, another question is the 15,000 crores that you talk about. This is entirely 63A, that is 9 million square feet. Is my understanding correct, or please correct me if I'm wrong?
Yes, sir. This is only 63A and only 9 million square feet as of now. There are various other assets which we are not even touching right now, sir.
The other assets, you mean the Delhi land parcel?
Delhi land parcel, there are various other miscellaneous land parcels, is all there on our website, sir. If you have a look, you will see everything. But for the next 4 years, our complete focus reserve is real estate is 63A.
Okay, so essentially, whatever 8-10,000 crores capex is going to be needed in ramping up to 300 megawatts, you expect to source largely by monetizing 63A, and yes. If there's a shortfall, then you will go in for LRD of your existing rentals.
Hanji, definitely, yes.
Okay, and how much is the existing rentals annually?
We are already at about 90, sir. All
90 crores a year.
Yes, sir. This is nothing to do with data center. The data center is very small, as you know, right now.
Yeah, of course. This is our commercial, right?
Which are yielding and other things.
So this 90 crores annual rental is from your commercial properties?
Yes, sir. Commercial and other properties, yes. Retail, commercial, other things.
Yeah, okay. So this can potentially be about 1,100 crores funding at 8 to 9% cap rate.
Hanji, some of this is already discounted.
And Amit, I mean, it may be a little too early, but like, do you sense that, because your data centers are going to be long-term contracts of 10, 15 years, these are also essentially assets which you can avail LRD on?
Yeah, definitely. That is what we are actually banking on if there is any shortfall. Sir, as you know, at Anant Raj, we are very averse to debt, and we will be out of debt by the end of this calendar year, number one. And the only debt which Anant Raj is open to taking is LRD. And this is one of the best items for LRD because you have long-term leases and good clients. So the rates here are even better than normal commercial building LRD rates.
Right. So do the renters in data center, do they have any annual escalation or anything of that sort, or is the fixed rate for
this is linked to inflation
on the revenue side?
Well, all these things go up. So this is directly linked to inflation as of now, sir.
Okay. Okay. Got it. All right. Okay. Thank you. Thanks, Amit.
Thank you. Thank you. Bye.
Thank you. We have the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Am I audible, sir?
Yeah, Vignesh, yes.
Yeah. Thank you for the opportunity and congratulations on a great set of numbers. So on the data center side, I just wanted to know if I heard it right. By Q4, are we expecting the Panchkula 7 megawatt also to kick in?
Yes, sir. By Q4, definitely.
Okay. So the ramp up would be quite fast, right? 3, 6. So the numbers would ramp up very fast to 28.
Yes, sir. So Q4 definitely, but because there are teething, handing over, taking over situations, servers come in. So it's a process. We'll be ready by December. So January, February, that it will start kicking in. But Q4 में से revenue शुरू हो जाएगा.
Okay. I mean, it is okay. February, March, basically the readiness would be there of the 28 megawatt, right?
Yeah. It will start sooner or later. Like we'll be ready. So then we start handing over and they start taking it over. Servers start to come in, like we just told you.
Right. So again on the Panchkula part where you said the server, the cloud server, the business you are eyeing as of now for a 0.5 megawatt, you are trying to get into it. So when you say that the server cost is around, you are going to spend around 30 crores. For that 30 crores, is it linked to 0.5 megawatt, 1 megawatt? Would the server cost be that much? I mean the capex.
So this is half a megawatt. This is 0.5 megawatt only. Okay. This 30 crores, and see, servers also, vary. The cost of server also varies from server to server. But the one we are going to be providing for the pilot project is going to be within this limit.
Okay. So for this specific, sorry.
Yeah, tell us please. No problems. Tell us.
Yeah. So basically, if I understand right, this customized server that is required for the specific client. So for that, 30 crores is for a 0.5 megawatt project, right?
So let's do this as a pilot. Sir, we feel, this is something, if you take it very raw, when we do deal with land, we start doing acres. Then when we develop those acres, we try to come into square yards. And when we develop those square yards, we come into square feet. And then we start furnishing those square feet also, and then so on. So this is something like that. We have understood co-location very well, and we are doing it. We are one of the best in the country now. So this offer came to us from our clients that if you start putting in servers, so we wanted to very conservatively approach this. So we picked up this as a pilot. We do this half a megawatt, and then as of now, the projections for this half a megawatt are close to 4 to 5 times of the investment which we are making. So let's take it forward and then try and multiply it.
Right. Absolutely. Thank you, sir. That's all from my side, and all the best.
Thank you, sir. Thank you.
Thank you. Participants, if you wish to ask questions, you may press star and 1. The next question is from the line of Upendra from Stockstar Consultancy. Please go ahead.
Yeah. Thank you for coming back again with another question. So the 0.5 megawatt pilot project which we are doing, you have told that we will be incurring around 30 crores for the 0.5 megawatt. So will the investments for the 5x revenue which you're projecting for the 7 megawatt, will it be in line with this, or will there be shifts?
Well, let's start this, Let's start this first. Just for our co-location, we started with 3, and now we are multiplying it. So let's start this with half a megawatt and then take it forward. Let it get established. Let us start earning money from it. And if we understand it well, and our clients start approaching us by giving us, technical backup also, and then we start multiplying this.
Okay. Understood. And secondly, I just wanted to ask why our investor presentation is only about data centers and there's no mention about...
So this is brand new. This happened in March. This is yet to start. But because we have already informed the stock exchange that we are going to be doing this, so we covered in the call.
But there's no mention about the real estate on your investor presentation, if I'm not wrong.
So sir, the update you will get in this particular quarter investor presentation, which we are going to upload today or maximum by tomorrow. You will get all the details. Yeah.
Lovely. Okay. Thank you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Yeah, hi Amit. I just wanted to understand the ramp up of revenues, because you just mentioned Q4 was around 3 crores. How should we look at it? Because we mentioned about 90 lakhs per megawatt per month. So shouldn't the revenues will be little higher, or how does the ramp up happen in this business?
This ramp up, like we just discussed, this is like handing over and taking over. And so this takes a little time. And as you know, as we all know, this business is brand new for the whole country. So, it is slowly ramping up. So we've handed over, but their servers are about to come. And, that way we are a very cooperative company and very flexible as well. So we want our clients to settle in well, and then we start earning. So this is a long-term thing, sir. This will go on. So initially it might take few months here or there. But ultimately this is all getting handed over, and there is enough demand. Today, like we just discussed, the law is already in place, the demand is already there. We just need to go on continuing. But at the same time, because the law has just been made, the demand has just come in, so there are teething issues in this thing, which we are quite equipped to handle, and we are very flexibly handling it.
Got it. So how do you see the share of profitability in terms of real estate and data center business in the next, let's say, 1 or 2 years? You would see a large delta in the data center business where the profits or the profitability in the share goes higher for data center business in the next couple of years.
Whether it's the real estate, we are very clear. We have our roadmap for the next 9 years. With the present land bank, which we already own. As of now, we are fully focusing on 63A, then Delhi kicks in, other parts start kicking in. So 9 years with the present land bank, we are completely sorted with our real estate. But yes, data center, we love data center. Why? Because today, as it is, we are a company which was born to create rental income. And this is something which we've always been doing. We came back into residential only in 2010-11. Prior to that, we were only focusing on making commercial buildings and leasing them out. We understand rental income pretty well, and we want to focus on this in the future also. Of course, office demand keeps on changing, but this data center demand will keep on increasing. As of now, the country's capacity, everybody's talking about, this capacity going almost 8-9 times than what it is presently there. So we see enough demand here, and this regular income will start. And like we discussed, the leases here are 10 to 15 years and, further renewed, because shifting a data center is not easy. Of course, being new business, it is settling in right now, and you will see within the next 6-7 months, you will see a lot of settling in happening, and then things multiply.
Got it. Thank you.
Thank you.
Thank you. We have no further questions at this moment, ladies and gentlemen. I would now like to hand the conference over to the management for closing comments. Over to you, sirs.
Thank you, everyone. Thank you for your time, and we hope we were able to answer all questions. Our Clouds website has already been, our presentation with our Clouds has already been uploaded. The real estate will be uploaded by tomorrow maximum. You can have a look, and then if there are any questions, the management is more than happy to answer everything. So we thank you once again, and like we said, we achieved a good year this time. So far, it has been the best, but we are pretty bullish, and the run rate will keep on ticking. And the revenues from last year really went up, and today the land bank which we are sitting on, we are very robust on the future as well. Thank you, everyone.
Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.